Hello, ladies and gentlemen. How are you? My name is Arslan Abbasi, and today we have a very exciting webinar with some beautiful and really high level guests on client onboarding, cross border KYB, and UBO identification. This is particularly aimed for regulated entities, financial services, professional services in Europe and in the global world trying to onboard offshore entities. So, without further ado, I'd love to pass the microphone to our guests here so they can introduce themselves. Ray, why don't we start with you? Tell us about you and a little bit about what you've done as well in the past.
Yeah, absolutely. Hi, everyone. I'm Ray Blake. I'm half of the Dark Money Files podcast and increasingly involved with a RegTech called Risk Alert 247, where cross-border KYB is kind of our bread and butter. I've run compliance teams. I've been an MLRO. But mostly I spend my time advising businesses nowadays.
Thank you guys for that. Klaus, do you want to go next? And then, yeah,
absolutely. Sure. Hi, my name is Klaus Christensen. I'm the CEO and co-founder of Know Your Customer Limited. We are an award-winning SaaS platform focused on KYB, really, or business verification. We're 10 years in the race now, and by now we serve customers globally, but we're especially strong in Asia, as in Hong Kong and Singapore, as well as in Europe, UK, Ireland, Germany especially. We work for some very large banks such as Standard Chartered and many virtual banks who use our services, and firms in other verticals such as currency exchange, corporate services, asset management, and so on.
Great, thank you for that. Gabriella, do you want to go next and then Grant?
Yeah, I'm Gabriella Catlin. I'm Group Head of Client Onboarding at Kerry Olsen. That's an offshore law firm. We're global, specifically within the Channel Islands, Caribbean, and also Asia and London. I have a huge amount of time within client onboarding, 21 years, specifically within the legal and property sector.
Real. I'm Grant Evans. I'm Vice President of Sales and Partnerships for WorldPay for Platforms here in the UK. I've worked in payments for over 15 years now, and I'm also one half of the Payment Shed podcast team as well.
Amazing. Thank you for that. And as you guys can see, we have a great round of individuals here from a KYB technology lens, from a WorldPay, fintech payment lens, and law firm, as well as banks and financial services with Ray. So we do have a holistic lens here of different regulated entities and different sort of experiences. Let's start with KYB. What does it mean? What are we looking for when we're saying KYB checks? Are we referring to directors, UBOs, address? Ray, Klaus, would you like to start, and then Gabriella and Grant add on to that?
After you, Klaus.
Fine. So since we built tech that supports it, we have learned a lot about KYB. When we talk about KYB, we mean the full identification and verification of business entities, which can be companies or even other things like trusts and so on. KYB checks especially are necessary for many reasons. You might want to know your business customer if you're any sort of entity, but for financial institutions, banks, and other financial institutions, you need to do this for the anti-money laundering AML processes. So the very first step there is identifying your customer very specifically and then verifying that identity. And indeed, it's not just one entity, just one answer there. It's a number of things, different from individual identity, where we have only one. A corporate entity is actually structured and has multiple parts to it. The controlling entities, which would be controlling directors and corporate secretary and so on, and the beneficial owners, which starts at the shareholder level, but can go in structures higher up. So that's my little start here. Ray, you can add a lot of color, I'm sure.
Yeah. I think that's a really, really good summary. And that's what most firms focus on. That's your ticket to the game. That meets your legal responsibilities, knowing all of those things and that verification. At Risk Alert, we look a little beyond well, and we help firms understand some of the additional risks that are hiding down in the data. And we undertake everyday surveillance on all UK incorporated, about 3,000 a day, to identify new suspicious and criminal networks that are sort of rating the market. And there are lots of them, and I think later we'll talk about some of the ways to spot some of them.
I guess naturally, I'd love to know, Grant and Gabriella, how are firms currently doing KYB checks? What tools are they using, and how is it done in-house?
So within the legal sector, and especially within an offshore law firm, we have clients all over the world. So any jurisdiction, we rely on clients providing documentation. We look at them holistically to back up what Klaus said. We don't just obviously look at the documentation, we also verify that, and it could be via certification. The main point I always look at as well is, what are we being asked to do, especially as a law firm? And it could be to create a special purpose vehicle and understanding who that client is. Have they been met? Are we dealing with that individual with the day-to-day control? And also using tech. So we do look at, we have a screening tool, and that is run on a 24/7 basis. And that's to ensure that, sanctions, any adverse press, we have to protect the integrity and reputation of the firm. And that means our analysts are constantly reviewing, whether it's hits that we might get or conducting periodic reviews.
Yeah, I think I can add from a WorldPay point of view, in the payments landscape, there's obviously, massive reliability on us for the actual end customers that are making payments to feel that their businesses they're paying have been properly vetted. I mean, we operate in over 146 countries globally. We're processing over 50 billion in payment volume. So it's not an easy task to do, and particularly when you think of the geographical setup that we've got. But in terms of the solutions that we will use, we obviously have big risk and underwriting teams. However, the process of having personnel do that at such a scale is obviously challenging when we're in a market where speed is so paramount to everything that we do. So we do definitely have to leverage different tools for KYB. There's lots of different platforms out there, obviously, that will help us to streamline that process. And I think with AI and some of the technological advances that are happening in the background, that's only helping us to move faster. And in the platforms element of WorldPay where I operate, we're ultimately just plumbing for SaaS platforms that service a whole host of different markets. What we need to do when we're moving into new sector verticals is understand the nuances that we might see, whether that's in gym software, in retail, in hospitality, because we get faced with different challenges from particularly a fraud point of view in different markets. And then again, that puts a real spotlight on the KYB that we're doing for end businesses.
Great. And just on that, I guess a great question is, what are the red flag data points you are looking for? Say for a WorldPay, for a bank, Ray, for Gabriella, for a law firm or a property firm. When you're looking at a business, guys, what are you looking for in terms of data points?
Yeah, I can start. I mean, the obvious data points are the ones that you need to tick the regulatory boxes. You need, as Klaus very clearly explained, to verify some data points about the business. But picking up on what Gabriella was saying, which is about the nature and purpose of the relationship. That's a key data point required to understand, because that puts the relationship in context. That lets you interpret what the client then goes on to do with your services, and for you to understand, look, does that make logical sense given what I thought this was about, and given what I thought this customer's purpose of coming to us was. because if it doesn't, then you really need to start digging slightly more deeply and potentially escalating. Beyond those legal basic minimum data points, I would also be really interested in the context of this legal entity. So, for instance, I may know who of this business is, but it would be interesting to know they're also the UBO of. If that person has previously set up a dozen other businesses, or maybe at different addresses around the place, all of which have been struck off before they have accounts. I'd want to know that before I took on that relationship. I'd want to understand what was going on there, for instance.
I think that's what you're touching on there is an interesting duality of the role of compliance staff today. On the one hand, they have the bare minimum, they have kind of the mechanics that they need to go through in order to identify the entity, identify the directors, identify the beneficial owners and the UBO, and then verify identities and check against is all the documentation in place and so on. Those are all quite mechanical, and you have to have a mind and the follow through and the repetitive way of doing these things. But on top of that sits a different function where compliance staff really needs to lift their view and ask the more interesting question that also is much more human question and context-based questions. Does this structure across 3 different countries and 2 continents make sense for a flower stall that has just opened an account with us? Or in the legal context there, does this make sense with their plans later on, an expansion or something? Those cannot be answered automatically or on a mechanical level. And this is where I see the role of technology really is suppressing the noise of all that mechanical stuff, taking it off the plate and letting compliance stuff really go that step further and exactly do what you're saying.
Yeah, I mean, from a WorldPay point of view, I can add as well, we're kind of aided by the card schemes. So Visa and MasterCard have VMAS and Match, which are kind of 2 lists that they would have companies registered against, and there can be a whole host of reasons why a business can end up on one of those lists, and a business wouldn't necessarily know that they're on that list, but we do at an acquirer level. So the schemes do help us, because acquirer X maybe not tell acquirer Y, that they've closed a specific customer for a reason, but the schemes will have information on something that may have gone on in the background. So we can leverage the wider payments network as well to help us with some of the decisioning that we're making in the background. Ultimately, it's become more complicated as global commerce has expanded. And again, from a platform's point of view, a successful customer for us, let's say they start in the UK, they might expand to Australia, they might expand to the US or Canada or a European market. That's a sign of their success, and it's a sign of their software doing well in different markets. But it does bring new challenges to us in terms of the documentation, as an example, that we maybe have to consume from a different market at an individual level when we're doing KYB on an organization. So again, selecting a vendor in the background that has really strong geographical reach and understanding of different markets, again, is really, really important for us.
So from a legal perspective, we have many repeat customers. The one thing that we do as a risk and compliance is rely on our fee earners. They have the client contact. We have obviously teams across the globe. So you might have one client that would instruct one office, hypothetically the Channel Islands, and then 6 months later they might instruct Cayman office, for example. Because we're a global firm, we will know at one point were they engaged in other offices. And it comes back to that kind of human level of understanding what is the client's objective, and also leaning on our fee earners to understand, you have that client contact, asking those questions. We can do as much as we can in terms of verifying the data, but it's just understanding, and it can be from a personal perspective. We have trusts, where families are related to it, and that's a credible explanation, to obviously a business perspective. And it's just understanding that, because when you're on a global level, you could have clients, different time zones. The challenge can be in terms of receiving that data and that answer and being kind of at the mercy of the fee earners to understand that. But I would say from that human level, understanding that and documenting that in your risk assessment. So if they are to instruct us again, we can revert back to a previous risk assessment. And tech definitely does play a part. And it's just from the perspective of us having these different teams, different time zones, and making sure that we're working in the same, capacity. But also with the challenges of ensuring that we onboard, within a certain time frame.
Did anybody want to add to these kind of thoughts before I move on?
Just picking up on that last thought there about making sure within a certain time frame. I think sometimes we can get a little bit blinkered on this, and actually I think we've kind of got 4 key stakeholders here that we always have to be mindful. First, our first stakeholder is the law regulation. We have to fulfill our legals on behalf of our regulated firms. Secondly, we've got our customers. We have a duty of care to our customers as well, to give them the right kind of experience through doing business with us, and we need to treat them fairly. Thirdly, we owe a debt to society, to make sure that bad actors don't get access to us and cause societal harm as a result. And then fourthly, we've got our shareholders. Our firms need to make reasonable profit, and actually, it's quite a high level advanced skill to balance those 4 competing often stakeholders, come up with something that's operationally robust and at the same time on those 4 sets of interests.
I think interestingly enough, Gabby, law firms would know a lot about this, wouldn't they? Because they're always balancing those stakeholders, client relationship.
Yeah, I would say.
How do you deal with that?
I think you have to have a good team behind you. I think you have to have a good point of escalation, because there are times when analysts are not going to be able to make those decisions. Obviously, engaging with your partners, your matter partner, and ensuring that your client service, as Ray's just said, you don't forget about them. Most law firms do have SLAs, service level agreements. However, depending on who your client is, and I think, as I've said with all clients, I liken it to almost going through passport control. You have to go through these checks. Some might be more simple and quicker. Others, it might take longer. And that doesn't mean if it takes longer that's wrong. It just means that to ensure your business and also your regulatory obligation is upheld, it might take, a few weeks, sometimes a month or longer. But you balance that with, like I've said, a good team, good tech, and time.
It's a really interesting one for me in the payments world, because we really just don't have that time anymore. It's such a competitive market, but trends that have arisen off the back of that have been what we would call partial onboarding. So maybe we were a little bit slower than some of the competitors in the market as a larger, more established organization to kind of really bring those onboarding speeds down. We're there now, but it has taken us time. And I think that the reason for that is we didn't want to get to a position like other providers where we did this partial onboarding journey where a customer thinks they've gone live. They start taking payments through a platform like ourselves, and then 2.5, 3 weeks later, no money's arrived in their business bank account, and they go, what's going on? I've been taking payments. I need to pay my suppliers. Where's my money? And they get a message through a support ticket, whatever it might be, saying, oh, actually, you didn't complete this step, or you didn't provide this document to us, or this thing's belatedly flagged. You need to send us this, and then we'll release your funds. It's a terrible customer experience, and it causes friction. And we still see it an awful lot in the payments industry today. And, particularly with bringing our platforms proposition to market, we have a 48-hour SLA on applications. They're generally same day for our customers of our platform clients, but it will always be full onboarding through we have an embedded digital journey. We use various tools to speed up those processes. But yeah, we wanted to do full boarding to make sure we don't have customers, especially when we're really plumbing in the background for our platform clients, and we're just something that should work and should enable them to set their customers live quickly. But unfortunately, there is definitely still a trend of that speed not being factored in the right way with some of our competitors in the market, certainly.
Well, your competitors actually have found a very good solution for that, Grant. And it's very simple. You just invent a few thousand users in the Philippines, like a certain German competitor tried, and ascribe $1 billion in transactions to them. You don't need to actually verify anybody then. And it's all revenue that's on your books. Isn't that a great solution? But my point is really, this is about integrity. Really ordered those responsibility in a certain way. And he started with your obligations to law and regulations, and he put the shareholder obligations in the fourth place. And that wasn't by accident. There are probably competitors at the moment who don't have that sort of integrity and do it the other way around. And that's just not right and will not work in the long run. No.
Cool. Thank you for that. We do have some good questions coming in. I want to urge people to please leave a question. We will do a giveaway if I'm in the mood for it at the end of this. So yeah, leave questions. Ray's here to answer your questions. Gabriella, Klaus, excellent guests here. Grant, tons of experience in fintech payments. So guys, we talked a little bit about kind of technology. I want to kind of go further into how many technologies do you need to actually onboard an entity, right? So an entity might start in UK, but then might go offshore. You might then ask them directly for their KYC or KYB certificates, right? Are you going to manually read that, or do you have a technology there that OCR reads the document, verifies it against kind of registries and other kind of official places? So on technology, explain to me how involved is technology from the onboarding setup, aka getting the client in the door, as well as the escalation setup. So certain things like, let's say Aventine Lab is onboarded, everything was fine, but then Aventine Lab has a shareholder change or something happened. Now you want to get the Aventine Lab updated. How do you do these things? So walk me through how the process with technology works at the beginning, on monitoring and the checks you do. What are these checks that you do? And then how far do you go and what happens during escalation?
So within my world, we are heavily reliant on clients' documentation. The only piece of tech we rely on currently will be for our screening. Because obviously we operate in an offshore world, most of that information is not going to be publicly available, even if it was on a piece of tech, you know, like an Orbis or Dun & Bradstreet. So majority of the time, our clients will provide the documentation, and we'll require that to be certified. We deal a lot with onshore law firms, and that includes obviously, you know, ID documents and proofs of address. And you know, one thing I do endorse my fee earners to do is to meet with their clients. Now we're in a time where people don't normally meet in person anymore, but I kind of encourage a Teams call, WhatsApp call, so that you can actually see who that individual is. Whether, you know, 9 times out of 10 it will be the controlling director or a director or instructing party.
So Gabby, if you don't mind me kind of, and I will do the same for their speakers.
Yeah.
So I want to pinpoint exactly the checks that you do. So when you say screening, you're just doing adverse media, PEP and sanctions, nothing more. You're not doing a Google check. You're not doing an employee check or LinkedIn check.
Yes, we will. Obviously, employee checks, that's slightly different, but for our new clients that we would onboard, depending on the risk, so obviously let's think of outside of our low risk, so a more standard and high, we would complete almost like a Google string search additional to the onboarding screening. We use a particular tool, Risk Screen, and then obviously outside of that, we then obviously are reliant on the client to provide the documentation. And like I said, you know, with onshore, so those onshore lawyers would have already onboarded that client, and they'll then provide us documentation, or it can be the client provides us the documentation directly. But again, obviously, because we work within this kind of, you know, cross-border global way, there are times when the client has been onboarded by a different office. So we already have an existing relationship. However, they become a new client with a different office. But that's essentially our onboarding journey. It might seem slightly different to most that use tech, But for us currently, it's working.
Essentially, you rely on primary source, which is the direct source. So whether it's a company certificate, a trust deed, you rely on that.
Yeah.
And then probably manually input that data into
Yes.
the screening provider.
Yeah.
Grant, how does that look like compared to a fintech with huge volumes and you need to get these done? How does your setup work from the initial to monitoring and escalations?
Yeah, I mean, in terms of WorldPay broadly, we have significant amounts of monitoring that are going on day to day. If fraud's obviously a big thing, like I said, in payments, chargeback, dispute management, all that sort of stuff. From an onboarding point of view, we really have to compete with what the neobanks and the challenger banks have created in the market, which is the removal of physical documentation. So the legacy process where you're uploading legal entity documents, bank account information, physical IDs, that just doesn't fly anymore again with regards to speed, because you want to capture that person in the moment when they're actually signing up. So if we took the gym, I'm talking about the gym SaaS vertical because it's one of our strongest verticals globally, but ultimately a platform has embedded our software, which includes our onboarding solution. So that's the gym SaaS platform that's maybe servicing 4,000 gyms in the UK market as an example. A new gym signs up for their SaaS software and they click, we want payments. They don't want that to be a long process, right? They want to click, we want payments, and then never have to think about it again. Can I start taking payments tomorrow, right? It's just something that's, a must have for their business. But in terms of that onboarding journey, they don't want to be uploading documents. They want to be doing it there and then. They're going to have a driving license on them probably. So we had to create a functionality within our onboarding flow that, again, is that take a selfie, scan the document that you've got with you on your digital device to your phone. So you're capturing someone in that moment that is likely the owner of the gym or a UBO of that gym. And they only have to do it once and they don't have to think about it again. And then we use open banking to do confirmation of payee for the bank account now to make sure that is the right bank account that legal entity has, registered account with. So again, we're not having to have people upload their bank statements now. We go and do manual checks. So that's removed two of the bigger friction points that we had that probably slowed us down from a KYC, KYB and bank verification point of view previously. And that is kind of the way that the market is moving now. And if you're not operating in that way, you are probably adding a few days to your onboarding journey. And again, like I said before, that just costs you customers and it would cost us platform relationships, because if someone else is doing it and they're onboarding same day and we're not, we're probably not going to win that business. So it's absolutely paramount to everything that we do, particularly in that platforms arena.
Got you. So let me ask a follow-up question to that. So in terms of KYB data points, so you don't ask the customer, you can get that data online, right? Is that so? The address, the company details, are you asking that the customer to fill that in quickly, or as soon as they type in the company name, that will just fetch?
Yeah, they'll type in the name and then it pre-populates into fields for them. So
my follow-up was, Grant, and Klaus, please step in, and Ray as well, and Gabby. Is that data the most accurate? So you could go on Aventine Lab, put it on Moody's or Dun & Bradstreet, but it could be a week or two old. Is that ever a problem, or what's the thoughts there, I guess?
Well, we built our platform on that premise, obviously. So we bet on, yes, it is a problem. This is actually something we've encountered many times with customers before that had other solutions or had other processes in place, then found discrepancies. Oh, we wanted to onboard this entity and we looked it up in BVD, but the parent company that was specified there in the data doesn't exist anymore. How can that be? And that is outdated data sets. These data sets are not they're behind the changing reality. And that's something that is fundamentally different between ID verification for individuals and KYB for businesses. Businesses are dynamic in nature. They can change certain aspects of themselves any business day. A director can resign, another director can come on. That director might be an Al-Qaeda member. A shareholder can acquire new shares. A new shareholder can be added any business day. And so what you need is not something static, not something that looks back and says, well, at the beginning of a year, this was what the company universe in UK or in Hong Kong looked like. You need something that tells you what is the actual truth as known by the government, as registered there. Remember, you are typically in most jurisdictions not an actual director of a company until you're registered with the company registry in that country. What is the actual reality today? That is what you need to know. And we built the platform on that premise. Now, there's different solutions out there in the wild, and they serve also different verticals and different needs. Some industry verticals do not need the real-time and fully compliant with all AML rules kind of solution. They are absolutely fine with a quick database check because they are not under AML regulation. But if you are, then you are mandated to have the actual reality, not the reality of months, weeks, or years ago. And so that's why we build it.
Klaus, can you, before we move on, explain to our audience what's the difference between static data? What do you mean when you say static data and non-static or live registry?
Well, in many countries, there is no way of acquiring a copy of the whole company universe as known by the official company registry. The official company registry sells access to each individual company record, or sometimes each individual filing documents filed with that registry on an individual basis. So in order to actually have the current set, you'd need to buy every single document of every single company every single business day, which is obviously economically not viable. So any providers out there that say we have 270 million corporate entities of the world, what they mean is we have some sort of stale database that we built over time from different sources, but not today's reality. And that's the difference between static databases and what we offer, which is a dynamic system that is live. So what we offer is we don't have a database. We don't know any corporate directors. We don't know any UBOs. The minute you ask the system connects to the registry under query here. So we have 146 countries connected to the system at the moment, so it could be any of them. And it will buy and download the document, and then it will read that document and convert it into real data. So what you then have are the actual shareholders and the actual directors that minute. That is live primary source versus database versus just documents that you ask from the customer.
Did anybody want to get in here? Ray, did you want to talk about red flag data points as well as what Risk Alert is doing?
Yeah,
well,
I mean, I can absolutely do that. I've got a more general point then about tech, because your original question was, you know, what tech do you need? So let me come back to that in a moment. But yeah, I think the agents that we provide in Risk Alert 247 for our clients are live, and it absolutely is live. We can tell you exactly now, as reported to Companies House, they give us all of their data. We're never more than about 2 seconds behind the live register. But what that means, keeping our own copy of the data, which is constantly refreshed, is it die on Companies House servers to service our clients, which if you had to rely on the Companies House servers, you'll but my general point about tech is that you don't need to, you're not obliged to use any tech at all. You go further and say regulator in the world that will afford any accountability to your tech. They hold people accountable, not technology. So you're accountable for your legal and regulatory obligations. You may choose technology to help you do that more effectively and more efficiently. If you are of a certain size and you're a certain size of portfolio, the regulator will expect you to use reasonable tech, but they'll never find the tech. They'll find you if you get it wrong or you don't. And it's rather like buying an Boeing. Boeing will deliver you an excellent aeroplane, which meets all of its specifications and is absolutely safe. You've got to fly it. You've got to maintain it. You've got to do all the pre-flight checks every time you use it. You are responsible for keeping the plane in the air, if you see what I mean. You're responsible to your passengers and to the Civil Aviation Authority, not Boeing.
I like that idea of seeing tech as like an airliner. I'll be charging my customers 29 million a piece next.
Yeah, it works for them.
Sorry.
Works for Boeing, absolutely. No, I agree.
Yeah.
Tech is a conduit. Tech helps, but it is the people that use it and have to use it right to be compliant in the end. I would say though that regulators have moved a bit further by now. They know about tech. They interact with the tech world as well.
Oh, yeah.
And regulations have shifted a bit towards using more tech and not just like being completely agnostic about that world. It would be difficult in today's world and with today's regulations, or the latest regulations, to be fully compliant with that, completely without using tech anymore. They presuppose the existence.
Yeah, absolutely. And certainly in the UK, the regulator has made collectations that in certain markets, for certain volumes of business, they will expect you to have made sensible tech decisions and be employing tech.
Yeah. It's very different, by the way, internationally or globally. We see that because we work in different jurisdictions as well. There's regulators that are super engaged in the world, and they have, for example, the Hong Kong MA, the regulator there, they have their own RegTech days. They have their own annual data summit where they talk about data connections, and they are very, very engaged. And the UK regulator has pushed forward immensely as well. But there's other European regulators, for example, that are very sanguine about the whole tech world and not interacting with it at all, not looking at it. No.
Just on the KYB lens, it's becoming more prominent. I think KYC was hot just like 5 to 10 years ago, but now KYB is becoming hotter. And a lot of the questions I get so I advise global banks, global law firms on their workflow, right? And one things they want to know is benchmarking. So how do we know we have the right tool, and what is the right tool for a business like ours? So for instance, for a global fintech bank, is it wise to kind of acquire 10 to 20 vendors? So, and they would have like, departments where there's hundreds of people on just escalation, hundreds on just questionnaires, KYB forms. So I guess, Klaus, this one's to you and the team as well, I guess. How are you guys seeing innovation in the KYB, and what is the future of KYB? And I'll just give you a prelude as well. In my opinion, I think digital wallets will play a huge factor in the future, aka not only updating your company's house information, but having a digital profile you go into and you do say, hey, today we updated 3 new directors. As soon as you update that portfolio, everybody who's onboarded you, who has access to your digital key, gets that shareholder updated as well. So I really like those solutions, and I think they're kind of thinking holistically about monitoring and changes. But what's innovation that you've seen or you'd like to see in this space?
First of all, I think there's still a good way to go from where we're currently at. We're currently at still in large parts with manual teams looking at uploaded or even physical documents. And that first has to move into the next phase. I think for future, there will be a broad move, like completely away from that. It's all digital, of course. And the kind of database solutions where you collect data from different sources and so on, and they're not connected to the primary source registries will fade out more and more, and it will be moving towards hyper-connected system like ours. But it goes further. You're absolutely right. Identity online is a big thing. And there have been so many attempts of getting this right. And it seems to be something that is very difficult. In the UK, we had this UK Gov Verify project that is distributed digital identity for people. Very, very interesting. In Singapore, there's MyInfo and CorpPass, another digital identity that gives you basically a wallet of your information that you can share with other companies, for example, for onboarding with banks. I think digital identity in its many forms, that is certainly something that we will see much more of, but it's still an experimentation phase. Very important, I think, is that in conjunction with other developments in the world, for example, the stablecoin revolution. There's something big going on at the moment where a lot of business is moving on these rails, and they need identity attached to it in a different way than we currently handle it.
Does anybody want to get in here? Ray, Ron, Gabby?
I mean, we need a whole other podcast.
I agree with all that.
Yeah, we do.
It's a big subject.
Cool. So let's carry on then. I guess we were talking about like the kind of the checks that you do, and cross-border is something that's a key theme in this webinar. So you, I mean, World Pay for Platforms and Kari also, they're international firms. So you're onboarding people from Asia, from US. I guess talk to me about the fact that you have a headquarters, but you also have all these subsidiaries around the world. If you're onboarding an international client, which jurisdiction do you choose as the main benchmark of threshold for UBO percentages, or how many directors do I check? How do you guys deal with these challenges?
Yeah, I mean, it's not as slick as we'd probably like it to be, and the reason for that is, in order to get a domestic acquiring license where you're getting the best rates in market, you really need a legal entity on the ground. So our global platform partners will have a US legal entity, they'll have an Australian legal entity, they'll have a UK legal entity, and they'll want to onboard with WorldPay UK, with WorldPay Australia, with WorldPay US. So it does lead to a little bit of duplication for them, but the benefit of that is they're getting the best setup that they need for their business in that market. And we boarded an Australian platform partner, which has been with us for a few years in Australia and New Zealand, into the UK recently. And, you know, they had to do new, and talk about this at a partner level, actually, rather than a sub-customer level. We do huge amounts of KYC and KYB on our platform partners and the UBOs of those organizations, which then have the thousands of customers that we also onboard through our embedded onboarding flow. But those partners will have to do new KYC, KYB with us in a new market, just because it's a new legal entity that we're looking at. It might be slightly quicker because we know them and we know the UBOs and they're trusted WorldPay partners, but it doesn't remove the fact that they have to re-onboard for the new market that they're entering with us. So it might be a unified API for the actual payment product itself. There's not multiple integrations, but as far as the KYC and KYB of that specific partner is concerned, we would still sign them to a new domestic contract, which means we will do new KYC and KYB. You know, it can be, you know, deemed a friction point, but actually most of our partners understand the reason behind, you know, legally why we have to do that as well.
So similar to WorldPay, the KYB checks it's down to the office that you're engaging with and the regulatory requirement. The Channel Islands, for example, they follow a very similar UK law. So, i.e., your beneficial owners at the 25% threshold, but in the Caribbean, it's 10%. There are times when we engage not only in the UK or Asia, for example. If you're setting up an SPV within the Caribbean, we have what we call a legal advice file, because that's who we've engaged with in order to complete the objective of setting up the SPV. So there could be an instance where the client is onboarded not only in like the London office, for example, but also in the Cayman office. So there could be more checks on the Cayman side than there would be in the UK. One thing that we do as a firm is we work really closely with our onboarding teams. We have teams across the globe, London, South Africa, Caribbean, Channel Islands and also in Southampton. So collectively, our analysts they engage with each other without having to kind of escalate it up to our heads of. But what it means is there's a level of transparency amongst all of our onboarding teams. And I actually think that kind of encourages the client service in that we're not as siloed as teams. But yeah, that's essentially what we have to do with our onboarding and meeting our thresholds. Yeah.
Gabby, can I ask you a question about that? So let's assume that you these Caribbean engagements on the back of, say, a UK engagement. So you have to lower thresholds for UBOs.
Yeah.
Is that data available to the UK entity and maintaining that data at a higher level? Is that an ongoing with the UK entity then?
So in terms of the data,
unsee
no, we would see that data. So because we are the instructing office, for example, we provide that information to our Caribbean team. So in theory, it kind of goes through our team. We might not look at the 10% threshold because we don't have to, but that's not to say that we won't have that in terms of our overnight batch screening. So the overnight batch screen, if anything comes out of that screening, we'll be alerted to that because our fee earners are in the UK. So our fee earners in London and also the Caribbean are engaged. So, and we use, a piece of software that allows us to have transparency. We know what the other offices are doing. So we'd be able to see the shareholders that are under the 10% threshold.
Okay, I see.
Yeah.
I guess Ray and Klaus, how do you see the challenges with cross-border compliance? Do you see hotspots that you've identified, like certain countries like Cyprus, or have you noticed patterns that firms are doing?
Depends on the customer. In our case, obviously, we don't do KYB ourselves. Our customer use our systems, but from being active in different jurisdictions, we are not by accident very successful in Hong Kong and Singapore because these are trading places that are hyper connected with the whole world, and that filters down to the entities that operate there, and therefore it filters down to our customers opening bank accounts and facilitating loans for these entities. A lot of these entities are cross-border. There's a Singaporean company owned by a UK holding company, owned by a few people, a partnership and whatnot. There is a Singaporean trading company owned half by an Australian partner and half by a Chinese entity with, again, sub-entities. So they have these cross-border, multiple level, quite complex structures so often. And what we were surprised, that's maybe interesting, what we were surprised about was a customer, a regional German bank that we work for, came to us and said, it's great you have all these international things, but we don't have many cases like that. Maybe 5%, 95% of all our entities are all just German because we do loans 10 million and up. They're just local companies here. Turns out after a year, we had to revise the contract because 30% of the total entities they KYB'd or checked with our system were actually outside Germany. What they didn't realize is that the world has changed in the European context just as much as in the Asian context. Corporate structures have grown to more complexity, and there's so much cross-border going on that a lot of the entities that they were dealing with locally in a regional level, yes, they were German incorporated, but they had a parent company outside, and so 30% was actually outside. And I think that's for European nations is getting so much more common. So we see that a lot. Higher complexity.
Complexities only going in one direction. Things are getting more complex than they have been in the past for sorts of reasons, and this are actually the regulations are more flexible than most people realize. In the UK and in Europe, and in there is an analog of this in the regulations. are required to take reasonable stand the ownership and control structure, the legal entities that are yours. Now, what that means is cross-border structures with lots of complexity involved. Sometimes you will hear like a secrecy location where there is a shareholder which you cannot be ownership of by going to a public register because there isn't a public. But you can take reasonable steps there to try and get behind it. And for me, reasonable steps is usually it's the client. The client knows who owns it. The client can show you the paperwork. You can't get it from an official because there isn't one. You need a court order, for instance, in the Marshall Islands to see that register. So for me, that's reasonable steps. You said to the client, look, we need to understand who's behind this. To tell anyone, you know, it remains private, but you need to tell us so that we have our legal obligations. And that's fine. Annotate that on the file. And I think you can demonstrate quite easily that you've taken steps despite the inability to verify an independent third party. It's absolutely, it's helpful. But the wider point here is where you do see that kind of ask, why is it that complex? What's the economic reason for that in the context of this customer?
There's one more complexity we should actually mention here, and that is the world has changed quite dramatically in the last 3-4 years in terms of sanctions. I'd love to hear from Gabriela actually how that influences your work. Sanctions used to be a thing that were updated every half year, maybe with a few more names in the UN sanctioned list and maybe the OFAC list there from America. That has changed. It's now weekly changes and it's hundreds of names added. It's so dynamic. And that introduces several additional dynamics and complexities in the situation, because if you know that sanctions change, you need to also be sure that you're screening the right people. You can't continue to nightly screen all the old directors that you onboarded 5 years ago. You need to be sure are they still the current directors and so on. Gabriela, like how does sanctions influence your world?
So it influences our world, obviously, when we've seen numerous sanctions. Well, keeping on top of, you know, who is sanctioned, so ensuring we have the alerts. When, you know, for example, the Russian sanctions happened, you have to do almost like an overnight periodic review of those clients affiliated to that jurisdiction where the sanctions originate from.
Yeah.
Also, we have to look at, you know, you can't just isolate, you know, individuals just by proxy of being affiliated, but you also have to look at, you know, are they still resident in that jurisdiction? Are they still registered? And that means obviously ensuring, you know, you engage with your client. With the sanctions, I'd say it's probably been the most complex time that I think most firms, and, you know, the legal sector is isolated. I'm sure, Grant, you probably sector. But it's ensuring that, A, we know who our clients are. Are they sanctioned? What are the next steps? Do they fall within POCA? Because that obviously becomes, you know, a question that does come up if that individual is sanctioned, or that entity, or what we have seen is ships, vessels, high net worth individuals within those jurisdictions that are sanctioned that have vessels, that falls within the sanctions. And collecting all that data, and then we're collecting all that data to then drill it down to who, what, and when. And then essentially that is then obviously escalated to, you know, the partners. We have a central committee that would look at those particular types of matters that make those decisions. And within the committee, we call it the SRC, it's the Senior Risk Committee. It's made up of partners within every jurisdiction of our firm. And they essentially make the decision based off the information that we find. Obviously, if you are a sanctioned entity, you know, the likelihood is if you want to still carry on acting for that entity or that individual, you then obviously have to apply for an OFSI license. And that in itself is a gamble, because you don't know if, you know, there's no guarantee that that OFSI license will be guaranteed, and that can, you know, incur costs. So there's no real black and white, you know, answer to this. It's very versatile in terms of, you know, can you act or not? But again, we have seen an influx of, you know, individuals or companies affiliated to sanctioned countries that have moved away and gone to different jurisdictions, you know, whether that's the Middle East, the US. But yeah, that's essentially how we deal with it. But we've got a robust system that looks at that, you know, when we've thought that there'll be other sanctions with other jurisdictions, we're already bolstering our teams to look at, okay, we're gonna have to do the same exercise again.
Just if I could add on that, what I've noticed with some top 20 law firms is they're getting a lot of offshore clients who are PEPs or don't have their KYC quite clean, right? And they come to UK firms for a very particular job, which is, we need to open bank accounts in UK. Please help us with our KYC, KYB files, so we're honest and upfront to the bank, so we can get that open. So I've seen a high spike of that, like, you know, kids with crypto and who grew up becoming super millionaires needing to open bank accounts in UK and Europe, but the banks are not having it because the source of funds doesn't make sense. The risks are quite high. Have you guys noticed a similar thing from cross-border, or have you guys noticed a particular type of instructions coming, or a particular type of businesses opening up?
Not per se. I mean, I could talk about PEP slightly differently from a WorldPay point of view. I mean, the main time we would encounter that would be particularly in the education sector, where you've got boards of trustees, where you might quite often encounter a PEP sat on a board or as a trustee, and in the charity sector where we have platform partners as well. So those two verticals, again, it's probably managing expectations with our platform partners that they're not going to get that same day boarding we might have as standard, right? Because we're likely to hit some additional screening checks or have some additional requests for information on particular PEPs. And we will sometimes have that where, you know, if we have a switcher platform, so a platform migrating from one payment provider to ourselves, where they want to onboard 500 or 1,000 customers in a very short space of time, we can do some kind of non-standard screening checks on those sort of like bulk onboard projects, if you like. So we can go back to our platform partners and say, by the way, these 15 schools here, we know we've got a PEP in each of these. They're not going to go through standard onboarding. And it's then on our partner success manager to manage that with our platform partner, to then manage that with the school to say, yes, we told you it's normally same day boarding. It's going to be a quick, seamless process, but actually you've got a PEP in your board of trustees that we need some more information on, right? So we'll slow down the process slightly. So how we manage those sort of situations is particularly important from a PEP's point of view. In terms of taking my WorldPay hat off, stuff I've obviously seen over the years working in payments, you know, it's following the trends. And I know we talked about this last week when we were gearing up for this around the gambling industry, and payments is obviously renowned for maybe some interesting company setups in the background. And we've had a little bit of a transition. We talked about Cyprus, where we've seen some of these gambling operators setting up shop, and then drop shipping is another kind of, I would say it has been a problematic sector in payments, but actually it's not so much now, because we understand the drop shipping economy, and as marketplaces have exploded, it's become more prevalent as a sort of business operation in furniture and things like that. But a lot of the drop shippers base themselves out in Hong Kong, and what we don't like at a payment company point of view is 100 legal entities with 100 very similar websites that just have a different shade of green or blue on the actual site, and it's the same director selling or maybe not selling the same product on 100 different sites, right? And there's a lot of money laundering and fraud that goes on in that part of the ecosystem. So, you know, the prior payment company I was at, we were very prevalent in Southeast Asia, and we had to get more familiar with some of those setups in Hong Kong, and Chinese UBOs basing in Hong Kong selling into the UK and using drop shipping and some of those practices. So how we look at And they're not all bad operators, right? So you might say there's 20% or 30%, whatever it was. There's 70% of legitimate companies that, they maybe did have 10 legal entities, but they were selling 10 different product sets, and they did have the same directors, but they were completely different websites. But you don't want to tarnish them with the same brush of this looks very similar to where we've had problems before, right? That's actually a good customer. So diving into the detail, I think, around the onboarding processes in those regions, and having experts as well in your team that actually know those markets. That I always talk about having boots on the ground, people that speak the language. They know the the markets that you're expanding into or operating in is really important as well.
Cool, thank you. We are at 1 p.m. and we do have a bunch of questions. Ray is just experiencing a bit of technical difficulty. There he is. He's back. So Ray, I was just saying,
Sorry,
it's
I
1
have an
p.m.
alarm
We have
here.
some
I had
questions.
to deal with it.
No worries. Somehow your camera looks much better, Ray. I don't know what you did, but your quality looks tremendous now. So we can see you super clear. Let's go through some questions if it's okay with you. Or do you guys have any final comments you want to make on what we just talked about? Sounds good. Sounds good.
Let's dig into the questions.
I'll just cover all the questions. Will this webinar share to all the attendees? Yes, it will. Jonathan C. Almeida asks, which countries are the most challenging to obtain UBO data from? Thank you, John. That's a great question.
Well, I start with one jurisdiction that is super challenging, and it's counterintuitive. Delaware is the world's black hole of corporate information. It's the biggest black hole. You cannot get anything out. And I think that's counterintuitive. You'd think, oh, it might be Hong Kong. No, Hong Kong is super transparent. China is transparent. It's something like that. And it's not Cayman. The universe of Cayman is small compared to Delaware. That's my answer here.
Well, there's one street in London.
Technically, if I can also surprise you. Oh, sorry. Yeah. I was going to say, technically also surprise you, the UK. Why? Because it has the concept of PSC, person with significant control, which not map to the concept of EU. And to get information on shareholders and percentages, it's not a data field on the UK register. You actually have to add it into documents and extract it manually, or you have to have an AI-enabled piece of tech to get to it. So it looks transparent, the UK register, until you start diving into the detail, and then there are.
I would second both. The states on a whole, not just Delaware. There are obviously, and when we're dealing with clients globally, there are jurisdictions that are a lot more simpler to obtain that data. And I actually second Ray as well. We cannot rely within the legal sector. LSAG says, we have to request the data from our clients. And there are some clients say, oh, but we're on Companies House. But as you've just said, Ray, the PSC isn't, you could check that data could have changed. So yeah, we always request that data from our clients directly. And, especially with the Channel Islands, because they follow similar rules to us, it's the same. Guernsey, they'll say to us, right, well, we need the actual data from the clients, so we'll need the share register. Yeah. Experience the same.
The regs say basically you cannot rely on the PSC register alone to satisfy your information needs. So you have to ask and then go and verify it with the register rather than just going straight to the register.
God, did you want to get in here? I thought you wanted to add something as well.
No, I was just going on about that specific street in London that a lot of companies are registered to, right? So when we mentioned the UK, that was what I had in mind.
Shelton
Ray
Street.
And Graham are great at. Hey, that's where my address is. So I think it's just
make you a bad person.
You never know. I mean, I could transform into a bad person. So, what are the challenges to get data from countries who have restrictions on cross-border data transfer, such as PRC?
Well, I can say a little bit about that because we have some experience with it. It's actually less common than you'd think. There's data residency requirements in many countries, but cross-border transfer restrictions are actually less common than you'd think. The PRC especially depends on how much you want to transfer. There are certain limits that if you fall under 1 million of their residents or citizens a year, it's relatively benign still. If you go over that, it gets really complicated. And at some point, you'd need full audit for the security ministries and so on. Typically, you solve that situation by having boots on the ground. Like in our case, local subsidiaries in different countries that have full access, and with local presence, legal presence there, you can get around these challenges. I mean, they are challenges, but they are solvable typically.
Any thoughts? Any other comments? Cool. You could ask.
I'd certainly defer to Klaus on this.
Yeah, we've gone through it. We have a Shanghai entity, for example, for exactly that problem. I'm a legal rep and a director of that Shanghai company.
Cool. Mark Bain asks, former the KYB, now I think some sub. How does static versus primary source relate to onboarding time?
I probably have to answer that one as well, like as a first. That is actually an interesting point, and happy to explain. Of course, static is faster. You basically rent out access to a database, and a database is just available anytime, so it's milliseconds. That's fantastic. But if it's not the right data, these milliseconds access times don't really work for you. In most jurisdictions, access for a primary source to the registries through a system like ours takes minutes. So the onboarding time now goes from milliseconds, possibly, to minutes. But I would argue that the verification part in the registries and finding this information, that time is only one small part of the whole onboarding journey. And so I don't think it makes a big difference.
I can second that, Klaus, especially if you have, I don't know, trust at the top of the corporate structure. Again, you're at the mercy of the client to provide that data. But in terms of obviously the information about your directors, the registered address, if you do have that static data, then you can, that part of the journey is very fast. But like with any client, how long's a piece of string? You can't put a specific time to any client, because depending on who sits at the top, where they reside, there's all different factors to onboarding.
Yeah.
Cool. If I could add as well, I think do your kind of due diligence on these KYB providers as well. It's some of them you don't actually know where the UBOs are. Particularly SumSub. You could look into SumSub and kind of look into where it has ties with the Russian government and so on. I read a great Thomson Reuters article done by a really senior financial crime investigator. Similarly, there are companies in Pakistan that have registrations in Delaware, in London, in a couple of the Singapore as well, completely using fake bots to sell to MLROs. Data, if they're using fraud as a means of commercial services, you could be assured their backend is going to also be quite suspicious. So there was another Australian entity, KYB tool, that had some adverse media on his KYB data being filled in. So he was saying that it was actually getting live registry data, but it wasn't actually allegedly based on the adverse media comes out. So do due diligence on vendors. Don't just assume vendors are clean. They're just great guys because they're trying to solve your problem. Then some of them are not. Like any other industry, there's bad apples and there are good apples. And I assure you, we've noticed bad apples enough to urge every single person I've met to please do due diligence on your vendors. Next question comes from Jonathan again. He says, how can institutions obtain updates to changing UBO data from, let's say, your customer as an example, at the time of change versus obtaining at the time of periodic review?
It's not just from us. There is a broad move in the industry to provide the next level of compliance, which is perpetual compliance, always being updated immediately. And we built this function for several jurisdictions where there's a push notification rather than a pull, where you periodically check the actual UBOs and are updated automatically. It's in many jurisdictions, it's complex to build because they don't provide these signals. So we need to build technology in the background that repeatedly scans every entity that you have in your data set every day to see, was anything new filed? That's one way, for example, to do that and then come up with that. But it's worth it because if there is a change, if this is actually a money laundering entity set up clean at some point, and then changing, you'd rather want to know immediately when they like suddenly have a director that's dodgy, or suddenly the whole setup changes with their shareholding company.
And if you are using the UK registry, even as a private individual, for free, you can subscribe to updates on any company you like, many as you like, and it's just like getting a Google News alert. Whenever anything changes, you'll know about it. And in Risk Alert, we've got 180 risk flags, which aren't just the sort of legal tick box. And you can put a tick in a box when you search a company and get a similar thing, changes to any of those risk attributes. So yeah, and like Klaus, we're not the only firm that will provide that update service, because as the question suggests, that's actually really important. But the company you onboarded is not necessarily the company that you're now facing.
We have seen some resistance in customers. Well, like when we offer this, not everybody wants to take it, because do you really want to have so many alerts? I think it's a strange way of thinking about it. You sometimes get resistance there.
Yeah,
especially for your higher medium risk companies, you want to definitely get those updated. We had an interesting one on an auditor leaving a particular kind of firm, and that auditor leaving kind of struck a signal, right? Something's going on there, and it's worth looking at. And when you looked at this company accounts, it had further revealings there. Gabby, what do you think of this, and how do you obtain an update and periodically make sure it's up to date?
Well, obviously, it depends on the client relationship. We have some clients and it's a one-off transaction and we won't act for them again. However, with those clients that we have an existing client relationship with, we are reliant on any piece of tech that can help with that. But a lot of the time it is down to the client to provide that information. One thing we do obviously with our, more our high risk, we do periodic reviews, depending on the risk. It could be 6 months, it could be a year. However, within the onboarding of clients within particular jurisdictions for registered office services or the incorporation of entities, because we engage directly with the incorporation of the entity, we'll always know of that update. So the teams can then update. I mean, it's a regulatory requirement, especially within the Caribbean and the Channel Islands. And I have, I've spent 20 years in risk and compliance. The Channel Islands, one that I can actually sort of adhere to, is definitely increase their regulation and their monitoring, and just, ensuring that, any updates, changes. I'd actually say that they're probably a little bit further than what the UK currently is.
Grant, what's your take on it, and how do you guys monitor and periodically review these mass accounts that you guys have on file?
I probably couldn't dive into the detail on the mechanics of it, to be honest with you. I mean, the vendor point's very interesting, I think, because what's going on with AI could probably lead to more bad actors in that realm that you're talking about there, I suspect, as well. And people painting the dream of all this data that they've probably pulled from an AI tool somewhere and then repurposing it or representing it as something that it's not. So that vendor due diligence in many ways is the same as the the partner due diligence that we have to do. I mean, I can probably comment more on the final question there, to be honest, that I've seen, because if you're happy for me to jump into that one, because I think adverse media is a very interesting one from a payments provider point of view, because it's, you know, we have core risk, which would be risk to financial losses, fraud, legal stuff, and then we have reputational risk. And this is every payments company that I've ever worked at, and reputational risk is interpretive to the organization you work for at a given time, I would say. And I've certainly worked in some smaller startups where adverse media wouldn't necessarily lead to a hard decline, whereas here, someone like WorldPay, it definitely would. And it depends on completely on what that adverse media is as well, right? Because you could have a situation where, you know, a business got into some financial difficulties, or they had a lawsuit 4 years ago, and what's to say they won that lawsuit, right? But they were taken to court for something that on paper doesn't look good, but actually the reality was that they defended that, and then you have a decision to make about, you know, who are we to say that they may have been in the wrong when they've won a lawsuit, right? So that's a really interesting one for me on the KYB, and I've seen different reactions to adverse media in payments world at different organizations that I've worked at over the years. And that actually comes to a personal level as well, because that's fallen out of an automated journey generally to hitting a physical underwriter or someone in our compliance team. And then you have an individual that is ultimately making a decision on behalf of the entire organization, which is an interesting notion, right? Because they're saying, I don't like this news story, I don't like this article. Even if it's maybe something that isn't a hard decline for us, they're then maybe getting a second opinion. But individuals within an organization are making a decision about, we don't want to work with this business, we don't want to be associated with them because of adverse media. And that's a really interesting thing that different organizations need to consider in a different way as to how they're going to react to something that might present. And again, you're going to get fake adverse media probably with AI as well. So it's just another challenge that we have to deal with.
Just on the back of that, I think it's interesting that I worked for, as in sales capacity, we were selling our solution to a law firm. The law firm had adverse media. It was a US firm involved in some scandalous litigations in the US representing some dodgy individuals. And they named the prestige, excellent firm, but we weren't interested in taking it due to its adverse media and pure reputational risk of dealing with this entity. Gabby, Ray, and Klaus, what's your thoughts on what Grant said there as well?
I can second everything. I think also it comes down to your firm's risk appetite. Some firms will have a higher risk appetite than others. I also think it depends on, you know, when the adverse press happened. I have seen where there's been blogs, you know, so a blog has come out about someone, are you going to take that? Versus an article in the Times, for example. And I think also looking at the timing, you know, did this happen? Was someone involved in litigation that happened in the 90s, but we're now in 2025? So you have to kind of weigh it all up, and, you know, also, you know, reputationally, do you want to act for this particular client? And I don't think there's anything wrong in ceasing that client relationship if you think it could have long-term damage to your firm.
Yeah, I mean, there's a wider piece here as well, this adverse media. I talk about media rather than necessarily adverse media, because there's positive stuff that adds to your picture of a company as well. So, for instance, media that says they've opened up a new market in country X, or they've developed a product line. All of that is priceless intelligence for your transaction monitoring and makes managing the relationship much easier. But the other aspect in which this really helps is is directly related to your legal obligations, because if you look at what the law says, it says you define a UBO as somebody who has more than a percentage of ownership or of voting rights in the entity, or who otherwise exercises significant influence in the company. Now, if you're onboarding Microsoft, it's going to say, oh, Bill Gates might have significant influence in this company, despite the fact that he doesn't have voting rights. But if this is a company you've never heard of, how are you ever going to know that? Well, you know, you might decide, well, I'm not going to go looking for it case. But in a high risk case where there's a lot riding on it, what what you can do is go to Google, rather than do a general Google search, do a Google News search, the company, and look through the first page, those stories, because the one thing that always get in business news is people's names. So look through those articles, off those people's names as they appear in the list of shareholders or UBOs or whatever. And if you're a name that crops up regularly that you can't provide either as a shareholder or as a UBO, go back to the client and say, I've read about this name keeps cropping up. Who is that? What function do they have in your company? Where media can be your friend.
What defines media as well? I mean, I've had a case where a risk analyst started sending me YouTube videos of a guy in a mask that was doing undercover reporting on a specific customer, and I was kind of like, this guy's wearing a mask for a start, so what's his relationship to the business? I mean, can we trust what's being said here? But is YouTube a media channel? I mean, it's at that scale, right? The stuff he was presenting, showing real world examples of him interacting with it. This was in the murky world of gambling and gaming skins as an example. So kids and teenagers and adults even buying, repurposable skins for video games and stuff. And there's a whole world of gambling that exists that I won't even delve into today behind that world. But some of the whistleblowing that's going on there is very interesting, but it generally does present on YouTube in that sort of form. So until it hits what you'd call maybe more mainstream media, how do you treat that as a vessel, and how seriously do you take that? That's a difficult one to navigate.
Just on that, similarly with Reddit and review places where people are leaving reviews like Google reviews or any other places, how much value do you put on that kind of research? Or LinkedIn? I constantly post about what I'm finding as red flags with particular vendors, but I know that I am making one noise, whereas they're making millions of noises in the ecosystem. So my little LinkedIn post will never show up as an adverse media because of the population of the spam media that certain companies generate to completely hide their adverse media, which is possible. And I think companies can hide adverse media really cheekily. Any final thoughts, comments? You can respond on this. You can kind of summarize the call today. But yeah, let's go through the call and get everybody's final thoughts and comments here. Klaus, we'll go with you first. You're first on that side.
Yeah, do it.
All right. Yeah.
I'll do it. KYB is getting more and more interesting and more important in the anti-money laundering world, especially since structures are evolving, are getting more complex. The trade is both getting more intertwined and also more under threat. So it's a really interesting space. I think we'll have to focus on KYB and business verification even more in the future. And there's so much we can do with tech to help that. So I think this is just the beginning of a great relationship between the users there and the tools they use to actually address this challenge.
So KYB is definitely an area that we're going to see a lot more transparency, whether that's regulatory, legally, and also just cross-jurisdictionally with other firms, and also the sharing of data. I think that we will see the next decade, especially with tech and AI, we'll definitely see more, like I said, challenges, but also the positives. And just ensuring, that we know who our businesses are, who our customers are, and that we're adhering to our own, risk appetite, but also, as Ray, said, morally and also legally.
Sure. So for me, a couple of things really. Firstly, recognise that the professional money launderers, and there is no other tally, professional money launderers know what your tick boxes are. Trouble ticking your boxes. So you have to look beyond that. You don't need special tools to do that. You need is the compliance instincts that you've already honed. Just use them in a different environment. look at a structure, look at a complex cross-border situation, and ask yourself, look, is this how I'd do it? Is there just or legal justification? Can I see it? Because if I can't, I'm going to keep on until I can.
Yeah, I mean, from my point of view, I always relate this to experiences in my own life with more on the KYC side of things, which is, you can transfer to what a business will be going through on the KYB side of things, right? Whether that's doing a mortgage application and thinking, why is this so manual? Why do I have to go through all these hoops? Why are they not using a more modern system, right? And applying a business lens to that. And of course, you have to keep up with the regulation. And I think for an organization like us, it is very important. Everyone talks about build versus buy. We're definitely in a state now where I think businesses really mix up that build versus buy part of their ecosystem. You can't build everything in-house, so you do need trusted vendors in your corner that will assist you and be the experts and the subject matter experts and have the latest versions of these sort of tools when regulation does change. We probably can't be reliable for doing all of that ourselves, and would we want to do that all ourselves? But it does make the vendor due diligence really important. But yeah, I take it back to what I said at the very beginning. Hopefully none of this is ever at the detriment of speed, because we've moved so much further forward from where we used to be around KYB that it is becoming standard to go through these processes very quickly. We've removed a lot of the friction, and I just hope we maintain that progression towards more seamless and quick KYB processes that, again, from our point of view, keep our customers and our partners happy and don't see us as becoming a blocker to them doing business and doing business fast. Because if that happens, that's when we start to have customer attrition. So yeah, that's my kind of fintech hat on this, I guess, to summarize.
Well, thank you all for that. That was a brilliant conversation there, and I think we covered everything holistically. We went depth into some areas. I'll share this with everybody, so people who didn't attend, we'll share the link for them. This will be on YouTube. Please contact Ray, Risk Alert, Dark Money Files founder, Klaus, CEO of Know Your Customer, a great KYB tool, Gabriella, Group Head of Onboarding at Carly Olson, Magic Circle, I believe, offshore firm. Is that right, Gabby? Yes. And Grant Evans, working for WorldPay for Platforms, part of WorldPay, one of the greatest fintechs out there. So yeah, thank you everybody, and yeah, really glad you could join us today. Cheers.
Thanks, guys.
Bye.
Thanks.